Tamanna, I think it's a good opportunity to start nibbling, because there's a lot of uncertainty on the exit polls, which would be starting from Sunday onwards. I personally believe that, once the final result is out on 4th of June, the markets would definitely, welcome it positively. And I think broadly markets are expecting anywhere between 350 to 380 assembly seats for the NDA government. So I think this is on course. So I think this kind of uncertainty is nothing short but a sentimental kind of reaction to the market. There's no panic. I think fundamentals continue to be strong. Within the given scenario, I would suggest that there are some interesting companies which came out with very interesting numbers. There is a company Tamanna which is called EFC India Limited, which is come into the limelight after the recent IPO of AWIS, which is into co-workspaces. This is an existing player from Pune, enjoys a market cap of more than 2,000 crores. And currently for FY24, they have reported a top line of 428 crores, a bottom line of 63 crores, which is excellent compared to AWIFS, which is loss making for last 3 years, operates in the same business. Of course, EFC is a small player. They have a overall size of 1.5 million, million square foot, adding capacities very aggressively, present in 6 or 7 metros. So I think these are interesting bets which the investor should look at, because this is where the alpha will get generated. Our sense is that over the next 12 months, one could easily expect a price of at least 525 to 530, because fundamentals continue to be very strong. Very marquee investors like Sage One have invested in this company in a recent preferential issue. So I think all said and done, these are interesting bets. Another interesting company is Marine Electricals, which not many people track. Company has reported a very strong top line of 670 crores, a bottom line of 25 crores compared to 16 crores. The company is into data centers. The company is into marine electrification, and actually caters to a lot of marquee customers like Cochin Shipyard, Mazagon Dock, Garden Reach. So it's a defense play and a data center play. I would not be surprised that this stock today could see a lot of action, despite the fact being, the market being volatile. I think our fair value is around 140 to 150 here. So I think, one has to be stock specific. We would stay away from the large caps for the time being. And I think we would just look at certain, good quality mid cap, because these stocks are not going to be dictated by the market, sentiment, or maybe the Sensex or the Nifty moves. And clearly these are positional bets. So I think all said and done, investors should use these opportunities to get into good quality stocks where the alpha over the next 6 to 12 months could be very attractive. So I think my guess is that some order execution has got delayed. So probably you could see a bigger ramp up in the revenue in the first quarter, or maybe the first half of FY24-25. The best part is that the company is sitting on a very healthy order book. So I think revenue visibility is pretty strong. I think markets are more concerned and happy about the profitability part. And I think, as you rightly mentioned, Cochin Shipyard, Garden Reach, their comparable peers have done remarkably well. So I think there's a slight disappointment on the top line growth. But yes, I think going forward, my sense is the management obviously would be making an effort to ensure that revenue growth also is equally healthy. So definitely nothing to worry. But yes, there could be a little hiccup in the stock price, considering the fact that all these stocks within this space have jumped quite significantly. So net numbers are good. Slight disappointment on the revenue, but I think nothing to be concerned about. I think my guess is, I think anything above 330 to 40 Tamanna should be a reasonably achievable number for the NDA. And I think, once the government, the market has already discounted that NDA is going to come back. Now it's a question of margin of victory. So I think typically anything below 300, as Neeraj pointed out, is something which is going to be concerning. I think it will be a big disappointment if NDA is anything below 300. But anything between, say, 325 to 350 is a respectable number, and I think that would please the markets. I think that is what our thinking is. So I think the 400 number may not be possible, as was declared by the BJP government earlier. But I think between 325 to 350 is an optimistic number, and a worst case scenario is anything below 300. I think, Neeraj, we have been telling our clients that instead of Edelweiss, I think, the recently listed Nuvama Wealth is a much better bet. I think the business is extremely profitable. The tailwinds are very strong. So I think, rather than putting money in the flagship company, and where now recently some regulatory issues have come up, I think it would be a wise decision to shift to Nuvama. I think Nuvama, is a very dominant player in the wealth management space. And I think that is where I think the markets are quite positive. I think over the next couple of years, we could see strong kind of tailwinds in this sector. And Nuvama has actually posted very strong numbers for FY24 with an equally strong, management commentary. No, I think numbers, I think, have been slightly disappointing, but again, there have been some exceptional items. So I think, broadly numbers are in line, but I think hopefully the markets are expecting that from the coming quarter, once these exceptional items are out of the picture, then I think, the markets would obviously like to see stronger bottom line numbers. Overall, I think the numbers have been not very bad, but also not very good. So I think it's a neutral call. We continue to maintain a hold here. Oh, exactly. I think you can obviously say that stocks like ICICI Bank, Axis Bank, I think look very interesting bets, and I think valuation catch up will happen post the budget, which is going to be announced by the new government. I would believe that banks are very well positioned, and within that, Axis Bank and ICICI Bank look to be very interesting. The numbers have also been very robust, and I think the management commentaries have also been very encouraging. So I think you're right in saying that somewhere private sector banks would obviously take a lead, and ICICI Bank seems to be the front runner here. So we would suggest accumulating ICICI Bank even at the current odd levels, and even an Axis, where I think FY25 is going to be significantly strong. Actually, we are interestingly, looking at domestic, cement companies. Our sense is that cement is going to be a very strong kind of sector performer. I would suggest that Heidelberg Cement, where we believe that, it operates largely in the southern and the, central markets. That is one stock where I believe, for a very long time, the stock is consolidated. So here possibly we are looking at a target price of at least 240, 250 over the next 6 to 12 months. So I think you could see interesting numbers for FY25, and pricing power gains are going to come in. Some amount of volume expansion is also expected. So I think net, around 190 to 200 would be a good, range to accumulate the stock at the current levels.